This chart shows a rapid vertical spike followed immediately by a brutal accelerated crash. It is the exact trap retail traders fall into, buying into a euphoric price breakout right before an account-draining rejection. Bitcoin has pushed past $69,000, entering a price zone where billions in short seller liquidations are currently clustered. Here at Crypto Whale Radar, we track the specific liquidity markers left by institutional market makers to separate these sweeps from sustainable trend changes. The data currently centers on one question: is this move past 69,000 the start of a macro rally or another sweep into a bull trap? Ethereum is currently forming a 4-hour setup that historically precedes a 10% move across the broader market. To navigate this specific market condition, you have to ignore the social media noise and strictly read the institutional liquidity data left behind on the charts. Bitcoin's immediate price action does not exist in a vacuum. It is heavily tethered to U.S. equities. This split screen shows the S&P 500 4-hour time frame alongside Bitcoin. Over the last 72 hours, we see a synchronized upward bounce. A sustained macro bounce provides mechanical tailwind. Bitcoin needs this momentum to validate localized breakouts. Zooming in on Bitcoin's 4-hour chart, we have confirmed a breakout above the critical $69,000 to $69,500 resistance zone. Without corresponding macroeconomic momentum, any isolated crypto pump completely lacks structural support and is highly prone to failure. When market makers initiate a liquidity sweep, they intentionally drive the price into specific zones where retail short sellers have placed their stop losses. This thermal heat map on the Bitcoin chart shows exactly what happened. The price spike completely erased a massive short position cluster at $69,500. With that void left, new institutional targets are actively building at the $70,500 and $72,000 marks. But this aggressive liquidity hunt creates a mechanical conflict. It has pushed the 4-hour relative strength index into mathematically overbought territory. Intermediate traders often mistake an overbought signal as a guarantee of an immediate crash. Instead, it dictates a mandatory cooling-off phase. This phase typically plays out in one of two ways: choppy sideways consolidation to reset the RSI, or a slight pullback to retest the $69,000 level. Institutional traders do not blindly short an overbought RSI during a macro uptrend. They wait to see if the asset can successfully flip previous resistance into new support. If you want to receive these institutional setups before the market executes them, subscribe to Crypto Whale Radar. Looking at the Bitcoin dominance chart, we observe a strict 6-month sideways movement. This macro stagnation forces major altcoins to act as high beta mirrors, meaning they closely replicate all of Bitcoin's micro movements. Executing these specific setups requires professional-grade exchange conditions with zero slippage and reliable liquidity. Use the exclusive BingX exchange integration link in the description below to access trading bonuses and our direct mentorship guidance. Shifting to the Ethereum 4-hour chart, the price is currently colliding with a heavy resistance zone between $2,150 and $2,250. This zoomed-in Ethereum chart shows the exact pattern we're tracking: an inverse head and shoulders formation, awaiting validation. The mechanical trigger is a confirmed 4-hour candle close above $2,200, setting a measured move target of $2,420. We must also track the parallel downside risk levels for other high beta assets. For XRP, that baseline is $1.30, and for Solana, it sits between $75 and $78. All altcoin technical patterns are entirely subordinate to Bitcoin's ability to hold its newly claimed baseline. Opening a long position while the RSI is overbought, without first confirming structural macro weakness, significantly increases the probability of being caught in a pullback. Our technical checklist for continuation requires two simultaneous conditions. Bitcoin must hold $69,000 as support, and the S&P 500 must maintain its upward momentum. If those exact conditions are met, the $72,000 liquidity targets become the highest probability outcome. Recognizing a breakout is totally useless if you do not know exactly where to place your invalidation levels. Click the video on your screen right now to learn the precise science of placing stop losses, so you avoid being hunted by market makers on your next trade.